Good morning, traders. Sam the Trader Geek with your weekly market review and preview for Saturday, December 6th, 2025. Hope you're enjoying a great start to your weekend. And we're going to take a look at what happened over the past week or so. Major markets on Friday. Kind of a mixed bag, a half and half, so to speak. Mag 7 up about 43 basis points and Q's up 0.41%. Uh, DIA up 0.2, and the SPY just eking out about 0.2%, where we had the dollar down, aggregate bonds down, gold down a little bit, small caps taking a little bit of a breather, along with TLT, yields rising, bonds down, and microcaps giving back 58 basis points. VIX losing 2%, so it was kind of a drain the theta day. And GBTC, Bitcoin, back to its losing ways, losing 3.5% after an impressive performance on Thursday, which had everybody thinking, including me, that there was more upside, but maybe it's a one-day give back. We'll see. On the week, again, another mixed bag with microcaps leading the way. 1.84%, Mag 7 up 1.29%, the Q is up 1%, and small caps up 0.8%. Leading the way to the downside, VIX giving up almost 6%, and the TLT losing 2%. So it's now down to the lower edge of its range. So we'll see if it's going to hold or bounce, but we need it to stay above 85 to keep any bullishness on the TLT. GBTC, that's the Bitcoin, losing 1.5% this week, and aggregate bonds about 0.75%. If we go down to the monthly, no point in that. It's the same as the weekly, right? And looking quarter to date, gold leading the way up 8.75%, and microcaps hot on its heels with 7.5%, Mag 7 up 4%, and just like the Qs, and small caps 3.64. Losing so far this quarter a whopping 22%. That's a Bitcoin, and the VIX down about 5%. TLT showing the continued weakness through this quarter, and 1% isn't that big of a deal even for bonds, but still we're going into a rate lowering, but yet yields are rising on the longer end of the curve. Year to date, a lot of green here, with gold far and above and ahead of everything, up 60% almost, and Magnificent 7 up 24%, with microcaps up 23, and Qs up 22%. SPY up 17%, very respectable. And at the bottom, of course, VIX losing about 11%. Bitcoin down 5.5% on the year, with the dollar weaker, down 4.55%. But TLT just holding on barely to positive on the year to date. Similar to the markets on Friday, the sectors were mixed, kind of half and half almost, with the best being retailer stocks up 1.24%, and the communications on the back of strength from Meta and IYZ telecommunications. IYT on a tear this week. I think it was up 10 days in a row, with the bottom in for metals and mining yesterday. XLU utilities can't seem to find their bottom, down 0.94%. And what you're seeing here with XLU and XLE is a 2-for-1 split that happened over yesterday morning. Same with XLB, down to 44. So they said they were doing them because of the high prices, but that doesn't explain why they didn't do it for XLI, which was higher priced than both XLB and XLU. That's on 155. And where's the XLV in all of this? Still at 153. So why weren't those split? Not that I'm advocating for any splits. It's just a mess. XRT, like I said, up 1.24%. Those are the retailer stocks. On the week, transports on a tear, up 4% almost. Metals and mining, 2.73. Technology up 244, and retailer stocks up 2.23. At the bottom, utilities and healthcare. So kind of defensives getting hit, including real estate, which has basically gone nowhere in weeks, if not months, this year. Materials down 1.36, and staples still showing relative weakness. On a quarterly basis, healthcare still leading the way, 10%, and metals and mining up 7%, with transports up 5.69. At the bottom, real estate losing almost 3%, and materials down 1.6%. Communications down 1.05%, but Meta is taking care of trying to get that one going again as part of that sector. Year to date, we can see that metals and mining far and above, ahead of everything else, 75.75%. Technology a very distant second, with telecommunications up 24%. This is a lot of this is are some of the AI stocks, but it also includes the likes of Cisco and I think Google as well. XLP back to down on the year, 0.19%, and real estate stocks, again, doing nothing all year long, up 0.79. And the lowest of the ones, at least with 1% up, that's the materials. We'll skip the industries this week, but go to Mag 7 on the week. Mixed bag, 3 up, 3 down, 1 flat. Google finally taking a rest after a torrent run over the last couple of weeks on the back of Berkshire Hathaway buying an allocation. We can see on the quarter to date, also a mixed bag. We see Meta down 8%, Microsoft after this week's news report down 6.72 on the quarter, and NVIDIA, despite a knock the lights out earnings report, down 2.23%. We've got Apple up almost 10%, which is nice, and Google far and away the leader on a quarterly basis. And on, if we look at a year-to-date basis, 69% versus NVIDIA, up half that much. Used to be that NVIDIA was untouchable, but here comes Google, Meta, up 15%, and the weakest of the Mag 7, up 4.62%, Amazon, which can't seem to get into gear and stay into gear for any length of time, which is unusual. But we shall see. Same thing was said about Google, so maybe it's the next one to get running, because they seem to be rotating not only amongst sectors, but also within sectors. So take a look at that. You'll notice it during the week that they'll sell one tech stock to buy another one, and then the next day they're on to the next one. So anyone who says rotation is dead is not paying attention. So let's take a look at the daily, weekly, and monthly charts for the major indices, see where we are. And on the SPX, you can see here that it was kind of a go nowhere week. If we look at 68.70, we were basically up 21 points on a $6,870 index. So you can call that a rounding error. Would you say we're up about 0.2% on the week? And you can also see that down here at 67.65, that was the lower edge of the expected move for the week. And then right here, 69.31 was the upper edge of the expected move. So we were dead in the center. So this was the week to sell options, not buy them. But we didn't even come close to the upper edge or the lower edge. We basically went nowhere this week, and so option sellers for this week had a good one for sure. And if we look at the options implied expected move for next week, it's about 106 points, and you can see it upper edge up here and a lower edge down here. So, and strangely enough, with the lack of movement and another 106 point move. Last week it was 100, and we'll double check that number in a second. The lower edge of the expected move is right on top of last week's options implied expected move. Very bullish. Nothing wrong with this. A bit of a topping tail on Friday, but it seemed to be kind of a lackluster, everybody's waiting on the Fed type of day Friday. But basically, it was a go nowhere week. If we look at the weekly chart, you can see that the MACD is trying to flip back up positive. RSI is at 65, not in the overbought territory, though that would be nice to see for the bulls. You can see here that nothing wrong with this candle. It's kind of a week of rest, and we have not yet made a new all-time high made back here during the week of October 27th. So somebody better call the market police and say we haven't had a new high in over a month and coming up on a month and a half. But nothing wrong with this chart at all. We're back into one time framing to the upside, which means none of these candles have violated the low of the prior week's candle. And then focusing on the monthly chart, you can see here that we're right in between the expected moves, as we saw here. MACD is totally positive, and we're still nicely overbought on the monthly time frame. So nothing wrong here on the monthly. Looking good. We need to take out last month's high, which was 68.82. How close did we get this week? Yeah, I guess we took out last month's high. We just didn't take out the all-time high. So we did take out last month's high, and are we above last month's high? 68.49. Yeah, we're about 21 points above last week's high. Duh, that was the move I described up here. So it's 21 points above last month's high. So looking good on all time frames. Another topping tail here on the NDX, NASDAQ index. Notice for SPX and this one, bullish chandelier, bullish parabolic stop and reverse volatility stop. So looking good. Right in between the two implied moves, but closer to the upper edge of the implied move, but we never took it out. And MACD solidly positive back above the zero line with the fast line over the signal line. We have the RSI not overbought yet, right at the 59 level above the neutral level. Looking at the NDX for on a weekly basis, we can see here that we're back to one time framing also on the weekly chart, and we need to take out 26,182. So it's a mere 500 points away. No, make that 600. Not too bad, 590 if you want to be accurate. MACD is trying to flip positive, and RSI is at the 64 level, not quite overbought yet. NASDAQ monthly, we can see here so far an inside candle, nowhere near the bottom of last month or the top of this month. So the top of November candle is at about 26,133. So that's a few hundred points away, and not too far from the all-time high, which was made in the end of October. MACD's positive, and we can see that RSI still red hot at the 75 level. Looking at the rut, rocket ship back up, and Friday kind of an inside candle. We tried to take out that high on Thursday, 25.40. Where did we get? We got to 25.38 yesterday. We couldn't quite take it out. And look at how close this new all-time high. I was sure that by Friday we were going to take out this all-time high, but it seems to have gotten there and building up energy for a bigger move. At least that's my theory, and I'm sticking to it. We'll see. MACD solidly positive, and RSI is not quite overbought at the 60 level. Taking a look at the weekly chart, similar to the other two indices, back to one time framing to the upside. Never threatened the option supply expected move for next week. And you can see MACD is trying to flip back positive after a brief cross of the fast line over the signal line. Next, we have the MACD on the monthly chart, positive. RSI at 64. This one on a monthly basis looks better than the other two. Had a nice little dipsy doodle, if that's what you want to call it, in November, and we're back to being above last month's candle. So what we're at this point 20 points away from the all-time, not the all-time high, I should say. This is the 52-week high, and maybe it is an all-time high. Let's see if we can capture that. So in 2021, this is a quarterly chart. We got as high as 24.58. So that's where I guess the all-time high lies, unless I'm missing something on the let's see, the yearly chart. So nope. So 24.58.86 was the high here. And yeah, we need to just take out the last all-time high there at 25.41, and that'll do it for us. So I misread the earlier number. In any case, let's take a look at the VIX. And the VIX has been trending lower. Bearish chandelier, bearish PSR, both volatility stops are to the downside. MACD solidly negative. Not quite oversold on the RSI indicator, and tried to get back up over 16 yesterday. Could not do it with volatility coming in. We've got on the weekly, taking out the prior year low, and MACD's threatening to turn negative on the weekly, as it is on the, well, that's still weekly. So let me switch that to monthly. And I don't really care about these, but 1541. So VVIX, volatility of the volatility, in a irrelevant state right now, down at 90 level. I don't start really caring until this gets above 100, and really start caring once it gets above 110. But all indication that it's trending down further with volatility. And so if we take a look at the VIX, and we have an expiration coming up, a monthly expiration for VIX options and the VIX futures, we can see that at 1541, let's call it 1550, the $1 out of the money calls are pricing in at $1.30. And if we go to the 1450, these are pricing at essentially at the midline about 4 cents. So yeah, options on the call options on the VIX are pricing for about 15 times that of the puts, which gives the advantage to the bears. Take a look out to the next monthly expiration. And 1650, these are pricing at $3.30, and these are pricing out at 10. So that's like 33 to 1. So that tells me that traders, big traders, are hedging, and the the risk is to the upside for the VIX and therefore the downside for the market. So this is one data point, but it tells me that there's some hedging going on, and it could be something that just passes after the FOMC meeting. And what Powell says, I think it's going to be more, everybody, it's a foregone conclusion that they're going to lower rates by a quarter of a point. But I think it's going to be more about what Powell says and whether the crybabies on Wall Street are not going to like the fact that he doesn't assure them that there's a January rate cut. And my thinking is he should pause, but nobody cares what I think. And in any case, I don't have the insider information that he has. But my guess is they will cut next week. It's not a guess, it's almost a certainty. And I think they'll stand pat and watch things for January based on the economic data that's starting to catch up at this point. Taking a look at the VIX futures, nothing unusual here. We are in a very bullish formation for the market, which means that the further you go out in terms of VIX futures, the higher the VIX. And that's what you would expect. More time equals more uncertainty. So we are in a contango environment. Nothing here unusual that says that risk is here and now, given that we have the front month, which expires in 11 days at 1730, and VIX, spot VIX is down at 1541. Finally, I just confirm the options implied expected move for next week. Right here at what I say, 100.496. So we're at 100 points, give or take, for next week. And that means we have a 68% chance of holding at or minus to the expected moves that I showed on the chart. Something I learned interestingly this year or this week is that when you look at the implied moves for the charts, if I put it back up, the SPX, and if you look all the way back to 2017, although this week we didn't even come close to touching the upper edge or the lower edge, 90% of the time we at least touch the upper edge or the lower edge during one of the weeks. So that was an interesting stat, even though technically 68% of the time we stay in between the two levels, but we tend to touch them. And I guess that's not totally unusual, given that if the probability of getting to this level is 68%, then you would expect the probability of at least touching or 68.3% of closing at or above there is 68.3%. The probability of touching it would be at least double that. So not totally unusual that it's 90%. One last thing, taking a look at the economic calendar for the week. Nothing scheduled on Monday, and Tuesday we have job openings for October coming out. I guess that's a delayed report, NFIB Optimism Index. Wednesday, you may have heard, there's an FOMC interest rate decision. And oh boy, the Powell presser, another one for the books coming up. And for those who care, the monthly U.S. federal budget as well. Initial jobless claims starting to get back to normal here on Thursday with a trade deficit as well. And then on Friday, we got Philly Fed and Cleveland Fed President Beth Hammack, one of the first ones out of the chute to have something to say. And just in case you didn't know, during the week before and the week of FOMC meeting, they're basically in their quiet period. None of the FOMC members can be out there yakking about anything until after the meeting. So I guess Beth is the first one out of the chute. With all that said, everything is pointing up. We have about 16 and a half trading days left in the month. That's basically um, 3 whole weeks plus a half week to trade in December, and then we close the books on it. So if there are portfolio managers that are itching to catch up, well, this is their time to do it. Um, we have had a very choppy week this week. It was a tough week for trading unless you were very nimble, given that the market went nowhere. Hopefully, and I wouldn't expect that would be any different this week. That it would be different this week, given the FOMC meeting and some of the economic reports coming out. But specifically, the reaction, not to the interest rate cut, that's a foregone conclusion, but to what Powell says about an interest rate cut that hints about January. And if it's positive towards January cut, then I think the market will definitely start its Santa Claus rally early this week. But I think Monday and Tuesday could be 2 days of chop fest in the markets. In any case, I appreciate you watching and listening. If you have any feedback for me, at Trader Geek on Twitter, and Trader Geek Sam in the forums. Appreciate you watching, and I wish you a great trading week and a great rest of your weekend. Talk to you next week. Bye-bye.